of gold goes to jewelries. 25% is used for coin and bars. 8% is used for industries. 6% for exchange traded funds like the new gold ETF I'm going to talk about. And then 10% currently goes for central banks with an expectation of that actually going up. Now, with demand, what is actually more interesting with demand is that jewelry is the main driver for the demand for gold. 61% of the consumption of jewelry in the world is actually consumed by two important countries, and that is China and India. Now, what is interesting about those two countries is that, in particular with India, the current middle class in India is about 270 million people. The projection by various researchers across the world, they're saying that by 2040, the middle class in India would have grown from the current number to 1.2 billion. Now, that's interesting. So it means to say now, given that India have got tradition and culture of investing in gold, in jewelry, so it tells you that that will have a significant impact in the price of gold in the future. China, on the other side, with the government encouraging its population to invest in gold, they're saying that by 2035, the GDP of China will be sitting at about 63 trillion US dollars, with the middle class representing 60% of the population. Now, with the middle class, it comes with a lot of economic activities. They demand lots of luxury goods. So that actually tells you what will happen to the price of gold. That's a driving feature for gold in future. Now, another interesting discovery is that the rise in technology will also have a positive impact on the price of gold. I mean, gold continues to be the material of choice for a variety of applications across the space tech. If you're looking at the current mode of transport that we use, I mean, we use cars that either use petrol, which is basically related to your palladium commodity, or some of us use cars that use diesel, which relate to platinum. Now, those kind of cars, as we know, they've got the negative implication or effect on the environmental, so they are polluting the environment. And therefore, there's been a strong pushback, in particular from the Eurozone, to say most of the cars must now either use more platinum or they must actually move into hybrid kind of cars that use a combination of natural energy, i.e. electricity, sun, as in battery, and maybe a little bit of petrol, but with an ultimate view that by 2040, all the cars will not be using petrol and diesel. Now, that is actually interesting. I'm sure I'm sure you recall, was it 2 years ago when there was a VW scandal in the US and in Europe. And the scandal was based on the fact that the German company was actually VW promising the consumer that they actually have enough platinum to cushion themselves against the ozone layer, against the emission and stuff like that, only to find that they were cheating. So now that became a big thing, to a point whereby the price of platinum was affected because they could no longer trust the diesel cars anymore. So that actually tells you that, with all these kind of commodities, the future use of it on cars with, in relation to pollution are going to be minimal, and therefore gold might be the instrument of choice. So as we know, with the rise of electric cars, they use your high-end electronic components. And those components, they use gold. If you're looking at most of the components, if you open them, you see there are a lot of gold and stuff, and that is gold. So with cars in the future are going to use electricity, it means there's going to be more use for gold. Self-driven, which we've seen some of them from Google. and other producers of those cars in the world. So with those cars, they also use electronics, and therefore gold will be utilized more. So it means to say the price of gold in future is going to be good and sustainable, and therefore gold will be even more golden. So it is important that we understand the role that the gold will play in future. Now, gold, besides it being part of the technology space, gold is known as a hedge against your major currencies. So there's a diagram here which was basically put together by World Gold Council using information from Bloomberg and Reuters. So what does it tell you? It says it compares gold with your major currencies like your US dollar, your euro, your British pound, your Japanese yen, and so on. Why? Because the view is that gold is actually money. If you remember way back, there was what you call gold standard. You can actually take your American notes, go to American Central Bank, exchange your notes for gold. Gold, I mean, USD actually then later on replace gold as a medium of exchange. So gold still has the features of being money. So which is why then they've done a comparison. So they're saying that the buying power of all these currencies being compared to gold, if you actually were to hold gold as a currency, your value of, or the buying power of your currency as in gold versus your major currencies would have been better. And the reason for that is that, I mean, most of the major currencies are actually affected. Their value is largely determined by economic policies by the government, determined by the central bank activities. In other words, they can be manipulated, but gold you cannot manipulate. It is not a liability to anyone. So that picture is quite interesting. But one would say, Michael, hang on, I hear you about currencies. I mean, in Kenya, in East Africa, we use kwacha, we don't use whatever. Talk to me about something that is more relevant to at least the continent. I said, okay, that is perfectly fine. But one thing that you must understand is that as East Africans, as African, we are part of the global nation. 88% of the trade in the world are done in US dollars. We export, we import, and we buy in US dollars. So basically, it tells us that our cost of living are actually affected by the US dollar transaction. So therefore, it is important that when we look at ourselves, how we perform, how we do things, we also try to measure ourselves using the global standard measure. Because we import a lot of goods, right? We buy cars from China, from Europe, and we buy those things mostly in US dollars. And therefore, dollars actually does affect our cost of living. Now, any country or any person who compares himself against himself is always a good performer. But if you compare yourself against other nations, therefore you can actually see that, are you still a good performer or not? So that's basically what happened. So what I've then done, I said, okay, let me actually find an index that shows the performance of our stock market across your major African stock market, and see how does those markets compared with the performance of gold if those markets are measured in US dollar. A typical example, if you're looking at the Kenyan market last year, it performed very, very well, about 35%, which is a good performance. Good performance even in previous years. But if you actually were to take the performance of any stock market which is performing very well in its local currency, you value it in dollar, you find that the performance is not as good as we see. So I've then said, okay, let me actually compare the performance of gold in dollar terms versus the performance of our African market. And then I found that in as much as our markets are performing very well in our own currencies, in our own countries, but if we were to compare that valuation into dollar, I mean into gold, which is actually measured in dollar, we actually not performing as good as we think we are, yet we do most of our transaction in US dollar, yet we import I mean, our cost of living actually affected by dollar. So that actually tells us if you had gold in a portfolio, you would have actually hedged yourself against the devaluation of your currency against the US dollar. So having gold is actually a key. So now when you say, Michael, you've been talking about this gold, how do we access that gold now? Do we go buy the mines? What do we do? I mean, buying the mines, maybe buying gold from the mines is one of the alternative things that you can do. But basically, the whole idea for investing in gold is not about seeing the physical gold. It's more about getting the benefits of investing in that kind of instrument. So therefore, it may not be ideal for you to buy physical gold because it's going to affect you in terms of, if I know you've got gold in a company, yeah. So basically, yeah. So I mean, so you can get gold. I mean, by getting exposure into those mining companies. But then the whole idea is not to have physical gold, because once I know you've got gold in your company or in your then I can organize my guys to come and steal it. So it's not a good thing to have physically. So and another way to own gold is actually by buying shares in the mining company that mines gold. But there are challenges with that. Say for instance that company is affected by industrial action strike. What tends to happen? The production is not there, but the demand is there, and the price of gold will go up, but the price of the shares will go down because of the negative information in the strike. So the most efficient and the most cost-effective way to access gold is by way of buying new gold ETF. New gold ETF is a product that was listed in South Africa in 2014. And secondary in 2004, and secondary listed in various other countries like Botswana, Namibia, Ghana, Mauritius, and most recently in Kenya. It is a product that gives you a direct access, a direct exposure into gold. It is trading on the exchange. It's like when you buy it, it's like you're buying shares. You can buy it today. If you don't like it, you can sell it today. So it's actually as liquid as gold. So each and every share, if for instance you've got 100 shares of new gold, those shares are equivalent to 1 ounce of gold, less the fees to keep gold in the vault and to insure it, which is like 40 basis points, very, very small. So basically, this is the best product that you can, as investors, actually use to get an exposure into gold to diversify your portfolio. New gold is listed with the stock exchange here. So any pension fund can actually go and buy. And I actually urge most of the trustees to say they must start now having interesting conversation with their asset managers to say, guys, I mean, Michael has taught us about diversification and that various instruments can be looked at. There are other alternatives, but the most efficient one is gold, through new gold, because of its characteristics. So maybe they can say, okay, so how does it work? Then you can give them information, and then you can actually start investing in new gold if you want to achieve a long-term sustainable return. And you can do that using new gold. Lastly, I just want to talk about, now one will say, okay, Mike, we don't have a culture of investing in gold. Can you share maybe an experience that has got a similar culture with us? So there was a country that actually has done a very interesting study. It's called Sweden. So Sweden actually, its study was inspired. One of the things was their property market was actually growing at a rate that is actually unprecedented. And they said, okay, maybe if our property is growing like this, there might be a bubble. We've seen happening in the US. And then we've seen countries actually buying gold, and we're not involved in gold. Why not? Let's do a study and understand how gold can help us. They did a study, and they found that having gold in your portfolio can actually cushion you against, it can actually help you to diversify your investment risk and giving you a long-term performance. So gold has actually been used in many, many other countries. And then, of course, there are criticism about gold. Like they say, gold's got no yield. I've explained gold doesn't need to have yield because it's not a liability to anyone. It's got no credit risk. Now, the most recent criticism I've heard about new gold is that they're saying that new gold as a fund does not track the price of gold correctly. I've then just pulled information on Bloomberg using the PM Fix, which is the price of gold, versus the ETF. And the diagram is very clear that that information that was put on the newspaper is actually incorrect. New Gold actually gives you direct exposure to gold, and it tracks the price of gold. New Gold is the most efficient and the cost-effective investment vehicle to actually buy gold. It trades on the exchange. You can buy it through your, through your broker, and Barclays Kenya is the market maker. You can actually even call them, and then you can buy through them. Let me take questions at this point in time, given that our time is not. If there are any questions around the product.
Thank you very much, Michael, for that detailed presentation, especially teaching us about gold. Now, as you went along, I went down, putting down a few points and questions. And one of my first questions is gold an alternative investment portfolio?
Okay, so within the alternatives, you've got you've got your private equity rates. You've got, so it's commodity that is alternative. So gold forms part of the commodities. It forms part of the group of commodities like your platinum, your PGM. So I've tried to actually explain that out of all those commodities, gold stand out. And then it therefore became an alternative on its own, and how it compares with alternatives, and then how it compares with traditional asset. So it is a commodity, there is an alternative, and gold is part of commodities.
Okay. My second question is, on the portfolio,
Yes.
as an asset, is it classed on at a higher percentage, more than a fixed deposit cash?
Is it classed as what?
Is the percentage in terms of the investment funds,
Yes,
classed at a higher percentage than fixed deposit cash?
okay. So there was a study that was done by various researchers in terms of understanding what is the correct allocation of gold within the portfolio. Most of the studies actually have come to a conclusion that the allocation between 5% to 10% is the optimal allocation in a portfolio that is well diversified.
Okay. Sorry, I have a few questions. In terms of still on portfolios and being classed as an asset, is the gold current percentage? We know there's a 9.99 maybe percent. I don't know different percentages.
Purity.
Now, purity.
Yes.
Is purity a very important issue here in terms of classification?
So that's actually a very good question. So various countries in the world produces gold, but we've got the gold standard, which is basically done by London Delivery Bar Association, to say the only gold that can be used for ETFs for investment, it must meet the global standard, meaning that it must be 99.95 purity. Meaning that, it's only a small portion that can be allowed as not gold as part of investment. Now, in other words, I cannot just go buy gold from anyone and use it as investment. It must actually meet those global standards. Then it can be classified as investment. If I buy gold, which is 50% gold and 50% sand, it does not meet the standard of it being an investable instrument.
Okay, so only gold that meets that standard would be classified as an asset.
Only gold that is produced and verified by London in terms of London Gold Delivery Standard by association can be classified as an investment for ETF purpose and for any other instrument. Yeah.
Okay, thank you. My other question was, since gold is an immediate liquid asset,
yeah.
It's a liquid asset, can it be turned, and it can be turned into cash anytime?
Yes.
Yeah, or exchanged at the time.
Exactly. Through new gold, though.
Yes.
If you buy it through new gold, like we buy it as the security on the stock exchange, you can buy it today, you can sell it today. And you've got a market maker whose main role is to provide liquidity enforced by the regulations of the exchange.
According to the demand of gold on the world market,
yes,
and we believe that South Africa is one of the top producers of this.
Yes.
How do you meet the daily demand? Because you say that the demand for gold, which is very obvious, determines the price.
Yes.
Yeah. Not
that we use to back the ETF is bought on the global market has to meet the global market standard, right? And therefore, I mean, gold is very, very liquid. You can find it anywhere. At some point in time, South Africa used to be the 50, used to produce 50% of the world gold, and now it's China number 1, South Africa is number 6. So gold is actually there. It's very, very liquid. So the demand for it, cannot be, I mean, cannot be a challenge. You can always find it. It's a very, very highly liquid metal.
Okay, thank you so much for that. Very impressive to learn more about gold. And I think if anybody has a question, please, Michael will answer. Before that, we are now live on Facebook page. And could we have their page again, please? Is it Facebook only or YouTube as well? Facebook only. It's called? ABMC-INT. It's ABMC-INT, if you want to open that page. We're live on that page. Okay.
Yeah, thank you, Mike, for your presentation. Mine, I want to know if you have attended a global world exhibition of gold. I believe if you are coming from South Africa, and South Africa has been a good leader in this area, you yourself, have you ever attended a gold market globally where you can be able to say that table is from China, this is from US, that is from South Africa, like that, on on a daily basis, just to see how the market is doing?
Okay, good question.
Last, in Kenya here, at a place called Ikolomani, that is the local name for gold mine. When we had the colonies, they had prospected and found that there is, a line of gold, and instead of local saying gold mine, they call it Ikolomani.
Okay.
Together with that, in my own home county, a Pakanyeusi company had done some prospecting, and there's plenty of gold there. How do we go about this? Thank you.
Okay. Okay, so the first question was around me attending the global conference on gold. Okay, so ABSA has a big commodity department that deals in gold. In particular, what we normally do is that in those kind of events, we normally send our research team to go and actually attend, because they are the one who actually, do more research on commodities than I do. So from my end, I'm not the researcher, I'm just a director of the product that uses gold. I've got information about gold. Okay, most of the information about gold is coming from the World Gold Council that actually normally organize those events. So, and my market maker, who's also head of commodities, he normally attend those kind of events, and then we share information. So we don't like send the whole team, we actually send more in particular the research team, because they are the one who are able to talk more about the outlook of gold, where is it going, and they share that information with us as the owners of the product that utilizes gold. But given that I'm the executive director of New Gold, there's been a call from the board of New Gold to say, Michael, we now want you to actually attend those events, even though you've got people under you who actually does the research, you do all different kind of stuff. So in the future, I'm going to go there, but I've got all the information. But interesting enough, as I said, the product is backed by gold. So when we do a stock count, we actually take cash, we buy physical gold, we issue securities. So that means we've got gold. So as part of the stock count, I used to go and physically verify gold myself with auditors, because we have to count to make sure that that gold that we're saying is used to link with shares is there. So I used to go and check it in terms of it meets the standard of London delivery. So I've seen myself gold with this hand of mine. I've probably counted about 3 billion worth of gold, so which is quite interesting. So I've seen gold, quite a lot. I used to go to those places where we keep our gold. but not event. But going forward, I've been asked by the board to say I need to go there as an executive director. Second question is how to go about the gold, the mine that we have discovered, that is being discovered in terms of gold. So that's a very interesting question. It's not the first question I'm hearing. I was also, I met at a group in Kenyans who actually said, Michael, we've discovered gold, but as you know, for gold to prosper, we need to be able to refine it to a level that is acceptable globally. And we understand that the refinery is only in South Africa. So how do we go about refining it first? And then I actually linked them to our Rand refinery company in South Africa to say they must talk and see how the investment actually works, because I mean they can only learn from each other in terms of how to make gold more productive other than just having the mine. So it's a question of having investors who want to invest in mines. It's a question of actually be able to refine it here, or if not, then we export it to a country where it can be refined. Within Africa, South Africa can refine it, but I think Kenya, there was a very big interest in also refining gold. So if that project goes ahead, you guys might be able to be one of the refiner of choice of gold in East Africa.
Thank you, Michael, for your good presentation. You've talked about gold, and New Gold DFT as one of the best alternative investment, especially for the pension schemes. My question is, most of the pension schemes are risk averse, and gold has so many of these benefits. So it would be an alternative to investment. What has been the uptake of gold as an alternative investment in Africa? What has been the challenges, and what can we do to improve the uptake? Thank you.
Brilliant question. When we brought New Gold in Kenya, it was at the back of the meeting that we had with stakeholders like your asset managers, consultant, regulators, and then there was a huge demand. We brought the gold ETF, it was listed, and we're hoping that at the back of that demand, we'll see traction, meaning trading activities. But we haven't actually seen that. To a point whereby the exchange actually asked me last year to come. There was an event where they put together all those stakeholders, say, Michael, can you share with us why maybe gold may not be trading as we expect in Kenya? I said, okay, I can only share the experience that I have, what I've seen. So I've listed gold in different parts of the continent. But where gold is trading mostly is in SADC region. And the reason why it's trading in SADC region, one is that there are regulations that forces pension funds to invest in assets according to the regulations, according to the prudential limits, i.e. you must invest certain assets to equities, fixed income, and in the alternative, and they give allocation, i.e. alternative in South Africa is like, and in SADC region is 10%. So therefore, pension funds are therefore kind of like a regulatory point of view, besides the benefits, they are forced to invest in this kind of instrument, not only to focus on one. And adherence to the regulations is a very big thing in the SADC region. In other words, they get monitored every month by the regulators. So if those are not monitored, there won't be a success in seeing a lot of products being traded. That was one of the reasons. Regulation play a key role and adherence to it. Secondly, was that the culture in SADC is that based on the financial crisis we've seen in the past, it is important to have to put together a portfolio that one give the beneficiary a long-term sustainable return, which is basically return, while you actually also looking at the risk. So it must have a balance of risk management as well as return. So the results of that, therefore, the asset managers are forced to actually not only to look at equities or fixed income, but also look at assets that give them long-term sustainable return. And remember, when they are measured, they're not only measured by return only, they're measured by risk-adjusted return. In other words, your return must take into account the risk that you have taken to invest in a particular product. And if you use gold, therefore your risk goes down and your return improves. So that's a culture that is there. That I mean, by situation and circumstances, they are forced to invest in a sustainable, well-diversified portfolio. Now, coming to East Africa, maybe the culture may be different. The conversation I had with some of the asset managers is that, I mean, in terms of the objective is to basically focus mostly on return. And therefore, if you're focusing on return, it's easy. You can just buy equity, buy fixed income, you have achieved your target. And less on risk. In other words, risk diversification, in as much as it's important, but it's not as important as return. And therefore, because of the culture here, that could be one of the reasons why this kind of product is not actually doing well, because asset managers and investors are purely mainly looking at returns only, which is a good thing, but could be a dangerous thing should the market turn around. You will lose, assets. You've seen that recently where few banks are collapsing, and I can imagine most pension funds have lost money. But if there's a culture of mixing return as well, long-term return and risk management, and I think these kind of products, not only gold, by the way, rates will also succeed, private equity will also succeed, because then the regulation will then force them to look at beyond just return, looking at other things. That's the reason why, in my view, it's not, those new products that the market has are not doing well. The culture.
Thank you very much, Michael. I must end the questions. If anybody has an additional question, please, Michael is still around here with us. Could everybody thank Michael for that beautiful presentation, please? Thank you very much. We'll have a break. It was meant to be 15 minutes earlier, but it will take half an hour. No half an hour, just 15 minutes still. We're back here by around 10:45 or 10, I'll say, probably 10:50 for the next presentation. Thank you so much. Thank you.
Yeah, those are the, on a daily basis, this is how we can learn. And since they are measured, we should be able to go in the market. There's a lot of gold in the market. I have a few people in UK. One of them is a doctor who is a resident there. A resident there. And he's my relative. But I would want them to be sensitized on pension. So once I think I manage to alert them and exchange your contact with them, they are good people to be sensitized on pension. Like many of us, until you reach retirement, people take pension and they don't do something about it. Then the book you said we will have access to. We'll also try and market that once we get the copies. Because one day I was in US, Houston, and I noticed that there were lots of books exhibitions around the libraries, around faculties like for finance. People would be used of that, and that should push, the sales. And even in Africa, here pension is just starting. So if there is information, I think it will affect the younger people.
Yes, what's the link? Mhm. Um, yeah, plus 21, 21, 65. The Jackson money is sorry, it's Levi and then Michael. Reina, after that he's Levi. Yeah. You have to have set it out 24 hours for YouTube. Pension, sorry, on the Facebook page, yes, but not YouTube. Yes. Oh, Do you have it? Do you PDF it or what? The first one. Is there going to use a phone on this? Then try to see this. Not just the people. Yeah, never on the phone. What's your phone? It's very small. Okay. No, no. So probably like I'll try to see. But the main focus for me is can really make sense. So far, you can but I think does that make sense? A lot, a lot. It takes them back now to hope.
Mm.